Trend analysis. In this section, I'm going to make this analysis super simple, but first we're going to have to lay out a foundation of understanding. So this is what part one of trend analysis is going to be about. I imagine that you've probably used many of these tools to determine what is the trend, when does it change. You've used trend lines, maybe moving average crossovers, channel breaks. Maybe you've gone so far as to be using speed lines, pitchforks, Gann lines help you if you were, and trying to make sense of all of that. Imagine how long have you spent trying to figure this all out? I spent a considerable amount of time myself, I have to admit, and eventually it just came to the most simple concepts imaginable, and I'm going to share that all with you. This is what I call a maze of confusion, and this is what you'll typically see on CNBC or different educators and such trying to determine what's the trend, when does the trend change, when does it break from an uptrend to a downtrend, and vice versa. And these are some of the questions that I asked myself when I was doing the same thing almost 30 years ago. And I would say, well, connect which dots? Meaning, do I connect from one tail to the next? Do I connect from closing prices? Should I look at the chart based on closes and connect the trend lines based on that? Does a broken trend line change from support to resistance? Meaning, once it's broken down through the trend line, does that line that I projected into the future actually become resistance? It was almost, looking for magic, so to speak. And as I thought about it, and looked at these lines and saw how many times they didn't work out, I had to question more and more the validity of this concept that is so widely used. How could it be wrong? But common sense kept pointing me in the direction that it was wrong. And then lastly, overlapping lines that came together. Was that a stronger reference point? Is the similar situation with Fibonacci retracements, meaning if I drew Fibonacci lines and connected different, if I connected from here to here and let's go from here to here, and then from this point to this point and such, if there were a bunch of lines over here interlapping each other, did that actually create a stronger area of support on a pullback? And connecting the dots in different places, were the lines in the right place? It just led to confusion and uncertainty, and we're going to clear that up in as black and white. Let's talk about trend quality first, or the lack thereof, and define it. Everything that we talk about as a technical concept, we have to define it so that it's clear and we can have confidence in what we're doing. Trading against the trend or without a trend, poor quality trends, there are a lot of the most common mistakes for failed trades. What does certainty look like within a trend? Well, it's a controlled arrangement of price bars. And there are controlled pullbacks that reverse at minor support or resistance, or they create it. We've covered these concepts. Uncertainty of the trend is seen through uncontrolled, erratic arrangements of price bars, uncontrolled pullbacks. They whip back and forth. They go beyond minor support. Maybe they go through major support and/or resistance and whip back in the other direction. We talked a little bit about this in moving averages as well, how prices could be overlapping through moving averages, or the moving averages intersecting through the middle of prices. And that was a visual aid to tell us that there was a lot of uncertainty. There's uncontrolled price movement. So we need to define these, and then, as it says, have the discipline to only trade the more predictable trends. So here's a picture of certainty. And we see that because the opens are not more than 20% into the prior ranges. There's few gaps, there's few tails, what we call a fluid movement. We see here's the closing price, here's the open, and it just continues like that. And as we talk about multiple time frames, and understanding that as we decide what time frames to look at, this arrangement of candles is one in which it tells us that it looks this way because of the time frame that we're using. we're telling the software, stop collecting data here and start collecting data. And it just is a fluid movement. And then as it moves back up, it's the same way. However, over here, this picture of uncertainty, we see that they're 50% or more into the prior ranges. There's lots of gaps and lots of tails. There's overlapping. It's just a picture of uncertainty and confusion. Let's move on to part number 2. Trend analysis, part 2. We're going to break things down into its most smallest parts and then begin to build on it into where we put all these pieces together, recognize and understand what the trend is and when the trend changes. And it starts with a pivot. And we have to define what a pivot is, of course. And a pivot is a reference point. There's been a shift between the forces of supply and demand. As I've said, we refer to supply, meaning this is where there is resistance. So there's supply there, there's sellers there. Demand is where there's support and there should be buyers. So pivots begin with a higher low bar on both sides of a bar. And that's a low pivot. Or with lower high bars on both sides, meaning a high pivot. And we're just going to use PH and PL to mark them. However, at that point, you really don't know whether it's going to become a pivot of any significance. So we need more information. Once there are 3 bars to the left and right of the pivot bar, a pivot has been created for us to use for trend analysis. Now, why 3? Well, we could use 2, but that really isn't that many bars. And when you see a bar with 2 bars to the left and the right, there has been a shift there, but we have to make a decision here as to what we're going to use as something of significance. You might see others use 4, 5, 6, 12, whatever it might be. But here we have to make a choice. And I've just found that using 3 bars to the left and the right works out really well. Now we're going to look at what the trend of pivots will be, and we'll use that objectively and clearly to determine the trend and trend changes. So we need to establish some guidelines. An uptrend is defined as pivot highs and pivot lows, higher highs and higher lows. So within that uptrend, a pivot low prior to the higher high is major support. A break below major support in an uptrend ends the trend. Pretty simple. A downtrend is defined as lower lows, right, pivot lows, and lower pivot highs. Within a downtrend, a pivot high prior to the lower low is major resistance. So a break above major resistance in a downtrend ends that downtrend. Here I have every pivot high marked, and it has 3 or more lower highs to the left and right of that pivot. And every pivot low, PL, has 3 or more higher lows to the left and right of the pivot. And you can see how those pivots are moving in a trend or not. These pivots are the reference points created on what I'd call the battlefield between buyers and sellers. It's clear, objective information. Cannot be manipulated like subjective analysis tools, Fibonacci lines, channels, trend lines, and etc. So here we have pivots moving up and down, sideways. You have a lot of highs and lows intersecting each other and chopping back and forth, what we call a loose arrangement of candles showing uncertainty. So the pivot, the highs and lows, they're in constant opposition of each other. What do? Stand aside, of course. Just stay away from it. Wait until it's clear as to what's happening. It's trending. The consolidation has tightened up. So this is, again, what we call a loose arrangement of candles. So we wait for it to begin to tighten up. Of course, we're going to look to see if there's a tradable void if we're thinking long, up above, or a tradable void below if we're thinking short. So here we have a picture of certainty, I should say, in an uptrend. And we have a tight arrangement of candles that are shown. Notice the ranges are about the same, meaning the ranges in each of the individual candles are roughly about the same. Here we have a larger one, but you can see overall right here, they're all pretty much about the same size. And that's a picture of certainty. And prices continue to trend in that direction. So we want to track that major support in an uptrend and see if it's violated, or where the trend becomes whippy or not. So here, as prices continued to move up, and they pulled back, and as they started to trend higher again, we can see here, and we can see over here, it's getting kind of whippy, and the ranges are expanding, and there's a lot of overlap between the candles, and tails are starting to form. That's where uncertainty starts to come in, and often it precedes a trend change. Now, by condensing data, it reduces the pivots. Now, what does that mean, condensing data? That means going to a higher time frame. So here I'm showing you a weekly chart. And it's actually the Dow. And as prices are moving higher here, well, over here there was a bit more uncertainty and was larger ranges. But as certainty comes in and the ranges contract and prices are trending, you'll see fewer pivots. So pullbacks and advances create pivots. And in a higher time frame, when prices are trending and there's a lot of certainty, as you can see here, there are no pivots. But we can move down to a smaller time frame or a lower time frame to actually see them. So here's a lower time frame. Here's the daily chart. And now we can see more pivots. As the price increases in momentum, there's going to be fewer pivots, which could be a climactic type of a move. In here, in the daily time frame, I can see that there was more consolidation, more uncertainty, more pivots. They're opposing each other. You have candles overlapping. And then there was this break to the downside that immediately reverses back up again. Remember our retracement concept, and took out all of these pivots here, that resistance, bottoming tail bar, and now prices begin to trend. And within uptrends, there are corrections and retracements. But as certainty increases, prices begin to accelerate again to the upside, and that creates a void, which opens up the probability of a correction, a pullback, where it could go sideways and then push higher. Now, it created a void below, but is there a void above? At this time there was, because it was making new all-time highs. Now we're moving down to the 60-minute chart, and we can recognize that prices are moving higher here. They were accelerating on the daily time frame, but we can see the pivots on the 60 time frame, and this is one of the ways that we can get on board the moving train, meaning a momentum move in the higher time frame as we move down to the lower time frame. So even though momentum had picked up, which we saw in the daily time frame, the trend had not broken yet on the intraday time frame. So for example, we see a climactic kind of move or an extended move on a higher time frame. We were looking at the daily. If we're now considering as an intraday trader to sell it short, of course we're going to want to see a trend break. And we don't have that happening here on the 60-minute chart. So the messages continue to go with the trend until it ends. Now, in the Master Trader Advisory Market Edge membership, I track trends of broader market indices and various sectors, and I do that on the weekly time frame, the daily time frame, and the 60-minute time frame, and we track it from week to week, and I look for and share with subscribers those trends and when they're in alignment between multiple time frames or not. So here is an example from one of the letters, and you can see the broader market indices here, and then all the various sectors that are tracked. And what we see here, these names that are highlighted in green, they show that the weekly and daily time frames are in alignment with each other. And when they are in alignment with each other, that suggests they're going to continue to move in that direction until that changes. I cover the hourly time frame as well, so we can have an hourly time frame that's either sideways or down against an upward trending weekly and daily, which says get ready during this correction and pullback for a continuation in the direction of these higher time frames. Now, if it's white, well, that means that they're either out of alignment at the moment, or they're just going sideways. Now, these two lines here, these two columns track what happened the previous week, and this would be the current week in the letter. So you can see when this changes from one week to the next, or whether it just stays constant. Now down here we see that in pharmaceuticals on this particular week went from sideways to a downtrend. So I know that there was a correction there. So with that information, I can then go and look inside of the pharmaceutical sector and now look for stocks that are moving down if I want to consider selling short. Retail is just neutral across all time frames, and it has been that way. So message there is most likely stay away. Technology has been doing well, continues to do well, look for longs. Over here, neutrality. But consumer discretionary turned up on the daily time frame. Maybe this is the beginning of something beginning to start, which will evolve into the weekly. Now, consumer staples, see the red arrow here? That means it came into alignment to the downside, the weekly and the daily, that week. And this is moving down, and probably, we'd have to go look at the charts, of course, but odds are pretty darn good we're going to find some good short setups over here. And you see that this is marked red because this is now in alignment. Financials have been moving up. Healthcare got a little neutral that week, turned sideways. We have a whole lot of sectors here that have been doing well in alignment. And on this week, the solar ETF came into alignment. The green arrow came into alignment where the weekly and daily were in an uptrend. Gold here, neutral, probably stay away. Gold miners actually turned down. And we track bond yields as well. And they had just turned up on the daily. So something here was beginning to improve where this was neutral the prior week, still in a downtrend on the weekly. Hourly is turned up. Might want to take a look at that. Move on to trend analysis part 3. Trend analysis part 3. We have to cover a few more attributes of changing the trend. We have to cover a few more attributes of trend changes and what that looks like, or the heads up or warnings, if you will, before that actually occurs. So here what we're looking at is the angle of correction and how steep that is relative to the prior angles of correction. On this move up here, clearly powerful as it moved above this resistance area, could be one big wide range bar on the weekly followed by a little consolidation, and then a relatively bullish angle of correction into the rising 20 period moving average. One of the things that we always want to do, as I've talked about, is taking note of that moving average, and is it in an area of support. So where it's not quite there, but it's close enough. And so as it gets down there, buyers came in earlier than the minor support level, and red bar ignored and right back up again. And then it moves sharply back up. Now here, this angle is okay, but it's a bit steeper. Didn't quite get to minor support. And then as it moved back up again, it just barely takes out the prior high. Now look at the power here as it took out that high and how it took out this high. And now the retracement above just barely takes it out, and then it gets all whippy. Notice the topping tail here that makes a new high and comes right back in. And you can see how this would create uncertainty. A new high breakout that comes right back in again with a topping tail. That creates a lot of uncertainty. And then it broke down below this swing low here. And now the next low was close at hand. So what we have here is a support level that's violated, but then the next support level is right here. There's no void. So prices bounce up from there. And overall, this is now getting choppy and erratic. Master trader concept: the sharper angle of correction, the weaker the demand. Clearly, you can see the sharpness of this angle here because it's straight down as it gapped down below this area of support. So that's really sharp, really weak demand, almost no demand. Of course, there was some, otherwise it would have opened up down here. But once it reached that level, it began to stabilize, which was in this unfilled gap over here. And this began to chop around here. Tells us that sellers are clearly in control. Now, when did the trend change from up to, well, what is it here? What is the trend? And this is what we need to cover here, but as it broke down through these lows here, it clearly isn't up anymore. So when does the trend change? When is it a new trend? We have to answer those questions, otherwise we don't know. We're uncertain, we're lost. So a trend ends when it no longer meets the definition of such. That makes it pretty simple, right? If it's not making higher highs and higher lows, it's not an uptrend. And if it's in a downtrend making lower highs and lower lows, it's in a downtrend until it overcomes major resistance. And an uptrend, that happens when it overcomes major support. So a break of major support or major resistance will violate a trend line every single time without fail. So there's really no need to draw trend lines, but what I'm showing you here is here prices were in an uptrend. Here's our major support, the low prior to the higher high, and prices push down below that major support. It'll break the trend line. It has to. So just knowing the fact that if prices move down under major support, you know that the trend line was broken. No need to draw it. In a downtrend, if it pushes up above major resistance, it's going to break the trend line every single time. Now, one of the rules that I have is that if it breaks below two prior pivots at one time, well, then that's an indication of very strong strength, and we'll say that the trend has changed. If prices move down under two prior swing lows, then we say that the trend has already changed. In this case, when it breaks through major support, well, when does it become a downtrend? When there's two lower highs and lower lows. So at this point, we would say it's now in a sideways trend. It could certainly go into a downtrend, but we don't have lower highs and lower lows yet. Once we do, we say the trend is now down. Now that isn't to say that we can't trade it from the short side before it's in a downtrend. Once it breaks through major support, well, then we make an assumption. We don't know for sure yet, but we make an assumption that it will make lower high 1 because it broke through major support. Once it turns down and pushes through lower low 1, we then have obviously lower low number 2, which then makes the assumption, because it's breaking lower here, that it's going to make lower high 2. So once it pivots here at lower high 2, we have lower highs and lower lows. We say the trend is now down. When does it change to an uptrend? Well, once it trades above major resistance, we say it's in a sideways trend, makes the assumption that it will make higher low number 1, which if it takes out higher high number 1 and makes higher high number 2, we then have 2 higher highs, and we're waiting to see if it makes a higher low. We then define it as a higher low once it forms a pivot. 3 higher lows to the left and to the right. We then have higher highs and higher lows. The trend is up. And the same when it breaks down. Once it breaks above major resistance, we can then trade from the long side at higher low number 1. Let's go a little deeper into our trend analysis and changes. So here in this example, you say trend change, but in these examples, technically the uptrend is no longer 1 because lower high number 1 becomes a pivot. So we have a lower high by definition. And the downtrend is no longer 1 when higher low number 1 becomes a higher low because it no longer meets the definition. But let's use some common sense here. Now, before we get to that, look at the trend line break. It was meaningless, did not violate the uptrend. And this often happens as prices begin to increase in momentum and then break lower. And this often leads many, actually the majority, that would use trend lines into the false belief that the trend has broken, and vice versa here in the downtrend. So the major trend has not been violated. Even when the new trend has been established, the major reference point, major support, or major resistance was not violated. So what I'm showing you here is that you do have a downtrend, lower highs and lower lows, but it's still above major support. And here you have higher highs and higher lows, but it's still below major resistance. We'll talk more about that. So these type of corrections have not violated that major reference point in the time frame being viewed. And often, it's still trending in the direction of the major trend in the next higher time frame, which is tradable. We're going to cover this in much more depth in the multiple time frame section. Now, as this pulls back, this is where, in this case, the major support point, or in this area, and we always talk about areas, in this area here is where we would want to be a buyer. Remember, as I said, this is going to be in an uptrend on a higher time frame, and it would just look like a normal type of a pullback within an uptrend. Just like we would buy normally in an uptrend at minor support, what we're looking for is this correction in the lower time frame to come into alignment with a buy setup in the higher time frame. No questioning here. Do we have the break of a trend line? Well, sure, but does it break the trend? Absolutely not. The break of the trend line was meaningless. And here on this pullback to this little congestion area, it's not a pivot, but into this little congestion area, we have a move down and a move back up again. And going back to our candlestick analysis, that 3-bar reversal is the same as a bottoming tail. Right? Do you see it? Can you visualize it? The same thing, down, back up. So we're talking about understanding retracements again, and this 3-bar reversal would be a bottoming tail in a higher time frame. As I said, the break of the trend line did not violate the uptrend, and most strong advances will break a trend line, and it means nothing. Here we have each higher high, the prior low becomes major support. So we continue to track those support levels. Push up, major support. Track that within the trend. Pushing back up again, new major support. Mark it off. Pulls back, new high, mark off major support. And you continue to do this over and over and over again. We looked at this chart before. Notice the topping tail. Here's your major support. And then there was a break. It's no longer in an uptrend. It made a higher low and began to move down again. And here, the next area of support. And now we need to watch closely in a situation like this as to what it does. Think about what would be the ideal scenario here, based on understanding the forces of supply and demand between those buyers and sellers. What is the most bearish thing it could do? Well, the most bearish thing it could do is just collapse, of course. But ideally, so we can get on board, would mean that it would go sideways in an area of support and show its inability to retrace back up again. And that would communicate to us that supply continues to come. And ideally, it gets quantified far enough away from this little support area here, which could be equal to these amount of bars, possibly, whether it's 7, 8, 9. It goes sideways here and then begins to break lower. And as we look at patterns and strategies, one of the things I'll point out to you would be within that base is to utilize our candlestick concepts. And we would look for a topping tail within a base where prices tried to go up and got pushed right back down again. And we would look to sell short under that base. And now, if it was to do that, we have a tradable void, at least down here. And because of the trend break and this sideways consolidation that would form further than what we see, in all likelihood it would break down below that area. Master traders do all of this in multiple time frames, and we find high probability, whether it's investing or trading opportunities. You're seeing the highs and the lows being marked here. I've already covered all of this with you. When price breaks that major resistance, the downtrend ends. So is it a downtrend or not here? You see the prices moved up sharply. They gapped up, and gaps like this will often create some pullback or consolidation. It could even end the trend. It happened on huge volume. But notice that this occurred after about 2 months or more of consolidation. So the move just got it started from this area here, and then it gapped up, and clearly there was profit taking. But there was no break in the trend as of yet. The momentum move was higher, and there were no pivot lows or major support reference point here because of that major move higher. So what happened here was it then began to create a sideways consolidation, which could be support, but we need to see it break higher here. Lastly, we do have lower highs and lower lows. It's like a peekaboo under the prior low, but it's not a downtrend because it's still above major support. And as you look at the chart, it should be obvious or clear to you that this consolidation here would be buyable if prices began to move higher. Trend and price analysis review. An uptrend is defined by higher highs and higher lows, which we see is the case here. And let's go through what's happening on the chart. Wide range bar igniting. Well, let's go a little further to the left here. That novice gap down on huge volume was the beginning of this consolidation. So seeing what's already happened here, we could now assume that this was not only, we know it was a novice gap because it was trending down, but it could have been a exhaustion type of a gap. Now as it went sideways, eventually it pushed up above this major resistance area, which then started this move higher. Red bar ignored. Here's the pullback. So as it moves up above that, we have a swing pivot low as it pushed higher. Here we have a bullish consolidation, little red bar ignored, and as it pushes up again, we have a pivot low. Push up, pull back, higher again, we mark it off, pivot low or major support. Push up again, wide range bar, topping tail, wide range topping tail, range expansion topping tail. Heads up, a little bit of a warning sign that this trend here is getting a little ahead of itself. As it pulls back again and pivots, we have a pivot low, but is it major support? Well, you should say no, because we needed to take out that high. It's consolidating. It needs to push up above that high, and then it can become major support. I hope this is becoming clear, black and white to you. It says without indicators, and we're looking at this volume here as it's happening, and we're putting together the candlestick concepts and following the trend and our candles and such. Really black and white. Pivot highs has 3 higher low bars to the left and right. Pivot lows has 3 higher low bars to the left and the right. Uptrend is over when major support is broken, the pivot low prior to the higher high. So I put together in multiple time frames the Dow at the time of this recording, and this is exactly how we would go through the analysis to see where the markets are, and we could apply this to a sector or an individual stock, and we come to a conclusions as to what is happening either within the market or that individual stock. Black and white. You don't need anyone else's help, guidance as to what's happening. Just follow the trend of the pivots, whether it's either up or down. So monthly time frame, here's back in 2009 as it began to trend, and we track the highs and lows as it's happening. And we say, well, has the trend changed? At different points, whether it was here Or here you would say prices are getting extended. Can they still continue? The assumption is that it will until it stops. And as it continues to trend higher highs, higher lows. And here we have the break of 2 prior pivot lows on the monthly time frame. And this is what I call repairing the damage. At this point, we're looking to sell this short up here. Now, we would have done it from a lower time frame like the daily, and it followed through from the daily perspective significantly, but it held that low and then came right back up again. And here we have a bullish consolidation at resistance. Notice the bottoming tail bar right here. So there was a shake to the downside, and then it came back up. There was a consolidation at the top of the range, and then a wide range bar igniting on the monthly. And at the time of this recording, we're just about into the end of the month. There's a couple of more days, and we have a wide range bar after an uptrend with an increase in volume. So possibly this could be signaling an end to this move in the short term, whereas we get a pullback at this time. Not the end of the trend, because there's no pivots here. Major support is down here. Minor support is here, and we've got a little minor consolidation where these bars are overlapping, which could be where it pulls back. The other scenario is it just climactically moves to the upside from here. We don't know, but what we do know, the trend is up and still bullish. Going down to the weekly time frame, we can see the same. Now we can start from here with this consolidation, this wide range bar igniting up, and take notice, it doesn't happen on a lot of volume. These moves can happen on lower volume initially. And then usually the volume will start to pick up as it becomes clear to the majorities that what's happening. And here we see the trend. Here's a bullish consolidation under the void. So demand continued, pushed up again, we get our major support or pivot low. Pull back, push up, we have major support, push up, the trend continues, and now it begins to accelerate to the upside. And notice that volume and a narrow range bar. So we had a huge increase in volume with range contraction. That's usually an early warning sign that prices are going to pull back. However, as long as it stays above major support, the trend is still up, and we would consider that pullback viable. Moving down to the daily time frame, we can see that acceleration, and that narrow range bar is this little consolidation right here. Of course, this could consolidate to where the 20 catches up, or it can just break out and push higher. We need to see, but the trend is still up, and we have no reference point of major support until way down here. So we could get a pullback into this area. Notice the unfilled gaps. It could pull back further, but the trend is up, so we considered viable. Now, of course, we're going to take notice of how this pulls back. What was the angle of retracement? So, for example, let's assume, for conversation's sake, it gaps down under here, and we had a wide range bar coming down into this area, and then it went sideways for 3 days and then broke lower again. Clearly that would be at least a short-term bearish situation, but once it came down into this area, we would then look for a viable setup and maybe to go sideways for a while. And these are the kind of things that I cover in the newsletter, the advisory newsletter. We go through all of that, and of course in our monthly meetings. Now, going down to the intraday time frame on the 60-minute chart, we see the uptrend. So as prices are moving up here, it became almost the right word, not forcible, but very convincing, or the thought of this pullback at this time happening, but it didn't. So as we go down to the 60-minute time frame, we could follow the trend and see, well, although I think it could pull back here, do I get a trend change on the 60-minute chart? that never happened. The gap up, prices moved higher, they pulled back again, they held, and they went higher. And now prices broke down under. So we had a trend break here. However, we have to go back to our retracement concepts. And that being when prices broke and we would be looking for a lower high to sell short as an intraday trader, of course, not as a swing or core trader. That didn't happen, and prices retraced, let's say, 80 to 90% of the prior move to the downside. Again, this repairs the damages. It tells us that demand picked up again, and now it's going sideways at resistance, which that suggests to us that demand continues and it could push higher from there. And this is new all-time highs. We would wait to see what happens. That being said, if this was to break lower and under all of these pivots, we would then have a larger area of overhead resistance. We've got these unfilled gaps, and as intraday traders, we could sell it short, looking for a move lower during intraday trading opportunities. Trend summary points. Master Trader, 7 attributes of trend strength. It's the angle of the trend, angle of the correction, trend quality. Are prices overlapping or are they moving in a fluid way? What's the distance between major pivots? Are bearish candles in an uptrend producing insignificant price corrections or vice versa? Bar arrangements, are they equal with little overlap? And lastly, time corrections versus price corrections, meaning sideways versus pullbacks. These pivots give us the market's reference points of these shifts between supply and demand. Without a clear void between support and resistance, trades are going to be low odds. It's greater likelihood that there's just going to be a lot of chop. The deeper the move into support or resistance, the greater the odds of moving through it. Now, certainty or the lack thereof is seen in the arrangement of candles. Are they overlapping? Are there tails? If there are no tails and it's moving in a fluid way, it tells us that there's certainty. A break of major support or major resistance are going to break the trend line every single time. This trend analysis, I hope I've convinced you that it's as black and white as it possibly has ever been for you, and it is. This is the Master Trader way of analyzing a trend and the break of such. And it's something that you can use for the rest of your time as an investor and trader, and knowing it is what it is and doing it in multiple time frames, you will know where the markets are, a particular sector, or a stock of interest. Is it going up, down, or sideways? And when does that change?